Streible is Chief Market Strategist at Blue Line Futures. Philip, great to have you with us. And I did want to start with that price of oil because I know, one other thing that we've been talking about is that the nuclear deal with Iran and how that might free up barrels per day. Do you think investors are pricing that in already, in that maybe some of the softening we're seeing in oil here?
Yeah, we definitely believe that there is going to be some reaction to Iran increasing that production level. However, we don't expect them to come to full capacity for quite a while. U.S. shale production has ticked up just a notch, about 26 million barrels per day. What we're watching really is, United Airlines, a lot of the different airlines, a lot of the travel sector. United Airlines is at 80% pre-pandemic levels as far as flights. In addition, TSA check-ins, we saw about 1.8 million flights on last Sunday. So quite a bit of action going there. And the range that you want to watch on crude oil, that low 61.95, that's right at our rare major four-star support. And the resistance point is up at 67. We believe that crude oil futures, this dip here is just a short-term correction. And we believe that structurally that demand picture is going to continue to outstrip supply, and we should see prices push on up.
And if we extrapolate to other commodities here, Philip, we've seen obviously hugely elevated prices and some pullbacks. Lumber would be one that we would look at where we've seen a pretty significant correction off that high level. We know that there are some supply chain issues here, and we know the global pandemic had an influence on some of this. How are you looking at other commodities when it comes to where they're trading now versus their real fundamental value?
So the specific one on lumber, that was originally, when the pandemic struck, U.S. and Canada's border was closed. We did see that trucking and the supply chain really be crippled. The output of the lumber yards has been quite high until they did all their layoffs. Now people are being paid more. It's more beneficial for them to stay at home rather than return to the lumber yards. And until some of these extra benefits that they're receiving are actually taken away that will drive them back into the workforce, that's when you're going to see really lumber supplies come back online, and we'll see that supply chain issue is going to be completely resolved.
Let's actually turn to the Fed minutes here, Philip, because we're just getting some of the headlines that crossed at 2 o'clock. And I must say, we're going to keep our eye on the intraday. We may have it here of the S&P 500. Nothing surprising, but definitely supportive of markets in the sense that the Fed is saying, that combination of the economy remains very far from its goals and that it is not concerned about inflation. Now, I would have expected to see markets turning the other way here. We're seeing markets sell off a little bit. It sounds to me like a Fed that is just reiterating it will maintain its accommodative stance for some time to come. Do you think the Fed's getting it right on inflation?
Yeah, they have to keep that accommodative stance, and they really aren't going to do much for at least the next 2 years. So you should see, until you see the inflation data really pick up, and then the jobs numbers, if we start really making a dent on the unemployment rate, that's when the Fed will turn a bit more hawkish. But I just don't see any kind of impact whatsoever. U.S. equities should continue to drift higher. These pullbacks are meant to be bought. And, the gold market has really responded too well over the last few weeks here with regard to inflation. So we're keeping an eye on the yield curve. If the yield curve continues to flatten out like what we've seen over the last few weeks, we should see a boost to the gold market as well.
Yeah, it's interesting. We're actually seeing gold reacting negatively to this as well. So maybe taking some of the inflation pricing out. Having said that, you don't want to read too much into the immediate reaction here, Philip, but we got the 10-year ticking higher and the dollar ticking lower, which I don't have the full minutes in front of me, but that's a little sort of indicatory to what I've seen the Fed saying. Do you think this market is ready to kind of jump almost no matter what? That feels like the wrong reaction to have to a Fed that's saying the economy still needs some time and we're going to keep our foot on the gas.
Yeah, it's probably just a knee-jerk reaction that we're getting right now. We do anticipate that, again, U.S. equities, they are signaling that we should continue to move to the upward end of the range. We should retest most of the high on all these commodities. They'll keep that accommodative stance, and you're going to see people and countries continue to try and hoard as many commodities as possible, pushing them all higher. The slight knee-jerk reaction, I think, is just temporary.
And then on that front, I mean, we've definitely seen, we're watching the cryptos today with great interest. When you see the kind of flows, both up and down, I mean, Bitcoin on the intraday is a sight to behold, right? There's obviously believers willing to come back into these markets. Are we in a period here where we're going to just see that kind of speculative movement up and down, where there'll be a lot of momentum trading, some of it maybe based on programmatic technical stuff?
Yeah, Bitcoin is 42% off its high. We've got a 30% sell-off this week. Really, it was China, their crackdown on regulations on crypto trading. That's what really triggered the sell-off. Their banks cannot accept virtual currencies, and also their banks cannot exchange virtual currencies for other currencies. And that's what caused the massive sell-off today in the liquidation.
Do you have a view of kind of the fundamental value here? Do you think investors are getting themselves into trouble with some of these cryptos?
I mean, some of the ones that are very obscure, where we can't see the real, reasoning behind trading them or even their functionality as a token, we just don't see it, so we avoid those. The two that we mostly speculate on is Bitcoin and Ethereum, because those are traded by the CME. And since launching that smaller Bitcoin contract, I believe it traded over 70,000 contracts here today. So it's definitely getting, quite a lot of people, quite a lot of attention on it. We were buyers of the correction for some of our clients this morning on Ethereum and Bitcoin at those lower levels, and we'll probably only be holding on to them for just the day until the dust settles. But it was a nice correction back upwards. A couple key levels, I still think 3,000 on Ethereum, 40,000 on Bitcoin. We've got to recoup those in order to keep that bull market alive in both.
Meanwhile, we've seen also a little bit of buying and selling in and out of those leaders of the market, the big tech names that still represent some serious growth and value. Where are you on the FANGs and the associated stocks?
So we really like Facebook. We like Google a lot. They've got great they've got great structures that are ahead going into the coming quarter. Apple has been a bit more flat. We've been avoiding Apple. Netflix, you've got this subscriber growth issue that's becoming a big problem. We're seeing that in other different companies that also are in the streaming business. There's been quite a bit of liquidation there. How many different streaming services can one person have? And now with the economy reopening, people are starting to travel. They're realizing that those needs just aren't there anymore, so they're liquidating those.